Good evening, everyone. I'm Michael Filigera. I'm with logicalsignals.com, and this is the Elliott Wave update for the NQ for Wednesday, April 7th, 2021. Before I dive into today's actual trade, I am now starting, as you can see, with the weekly chart so that I can go back and really be a little bit more detailed in terms of what the alternate count has been and where we are within that count and how that relates to what we're doing right now. We are in the process of continuing to count a primary 5-wave degree advance to complete a cycle wave 3. That's always been the case. I had previously put the top of that cycle wave 3 right here. That now presents a little bit stronger case for not being correct, and that I needed to move my intermediate waves up and increase them so that the count was more reflective of what the market was doing and what we can expect and how the personality of these individual waves are coming through. Okay, so the pandemic decline was primary wave 4 and always was. And now we are in that stage of we are counting 5 waves of intermediate degree in an advance to complete a primary 5th wave, and in turn, then complete a cycle wave 3. Now, where are we within this primary 5th wave? Wave 1, wave 2, wave 3. So at the 13,900 high, that's the end of wave 3. Then that initial decline that we got, and I can immediately shrink this down and go to the daily. This initial decline that we got here, we did count it as an ABC, but we labeled it A. And what it's ending up being is intermediate wave 4. And now we are in the intermediate 5th wave of the ongoing primary 5th wave in the ongoing cycle wave 3. So it's a pretty big top that we're coming up to. That remains the fact. So what we want to do is begin to look at these internals. So previously, I had labeled, we were labeling this as an intermediate wave A of an ongoing decline, and that we were in the B wave, and we had thought the possibility was very strong that that B wave completed right here. And that's what we talked about yesterday. As it ends up, I am going to favor the preferred count, because as I come on to discuss today's trade, we have now broken above this high. We did make 3 waves down. It was a sloppy rally up to these new highs for this particular sequence, but we're trading at 13,663. So we're above that high, not by a lot, but we're heading up to that next zone. We'll get to that in a minute. So what was labeled wave A is now minor wave 1. What was labeled as wave B is now minor wave 2. And this likely just completed minor wave 3. We'll go down again so we can see some of the internals. And now that we're breaking out and going higher, I'm going to call this minor wave 4. Now, if it turns and comes back down tomorrow and slips below there, then the 4 is just getting pushed out. More importantly, what's happening right now is that the market is truly letting us on, and not leading us, but letting us know that what likely the attempts are going to be for the balance of April and going into May. Now I got to actually take this back out to the weekly, because now I want to put some Fibonacci numbers in there. Let me try it on the daily. Yeah. So now I'm going to put Fibonacci numbers, which are going to correlate with this intermediate fifth wave. And the first thing I got to do is go from this bottom here. Oh, why did it do that? Forgive me. I'm going to put it and it doesn't take it. There you go. All right, so we're going to go here. We're going to go up to that line. We'll come down to that bottom of wave 4. Okay, so now let me pull this down a little bit so we can see it. I know I'm scrunching it. Don't pay any attention there. This was a 3. We're looking for a 4, and it may not be complete yet. So we have to go with the fact that the market still might swing back around and come back down and put a new low in here. 4 gets moved over because this does not seem to me extremely bullish in terms of what it's done thus far. And I can open that up. I don't know, that didn't work when that happens. We can take a look that as we go, it's kind of pretty sloppy. To be a finishing move, it's pretty sloppy because we need to let the market really kind of put in more of that blow off top. That's what we're going to look for here. And this certainly doesn't cover it as far as I'm concerned. If we got more of this type of a move, yes, then we're in action. So unless it starts to really pick up steam and we're just really kind of working our way through minute wave 1 of this minor wave 5. Okay, so we're going to track it. But right now we're going to leave open the possibility to come down here, put a cleaner 4th wave in if necessary. If not, then this is going to be it. And as the market continues to pick up some steam, we will begin to look at what these upper levels will. Now, mind you, this is just that wave 5 would be 0.382 of wave 3. And obviously, no. So it's past that. Its next resistance zone, we know we continue to have that zone at 13,688 to 13,700. It's not included here because it's done on a smaller scale, and then it would just fill in here. But if we look at it in its larger context, these are going to be the numbers where it's going to start to shoot for. And that's 13,826. Now, mind you, we got to get above 13,900. We don't have to, but that is going to be preferred to signify that we've moved to a new high. We have fulfilled the requirements of the structure and what it should do. Can it fail? Of course, but we'll deal with it when we're there. More so would be the internal and what it looked like. But that's the first stop that we're going to look for. And it should find some resistance there, but eventually keep going. This is going to be the zone that's going to be more in line and to fit the picture. At number 1, it's a new high by 300 points. And so that all works pretty cleanly. And it's 14,212. And that would then equal 0.618 of wave 3. That's the common relationship between 5 and 3. Not that wave wave 5 is going to equal wave 3, because on the normal basis, wave 3 is the longest and the strongest. So that kind of can skew that. But wave 5 can often come in at 0.618 times the length of wave 3. In this case, it is 15,817. So it's going to be even above that. 618. Oh, actually, excuse me, that I'm wrong. It is 14,212. Forgive me. That was a different calculation that I was looking at. And then beyond that, I begin to have that. I did work out that wave 5 would be equal to wave 3 at 15,000. It's going to be right there, 15,460. So it's like, well, that's blow off high in my view. But hey, these are all within the realm of possibilities over the next several weeks to a month or two. And I'm going to pull this back down because I want to keep it a little bit on the short side, but I'm going to bring this back out, put it on the hourly, actually move it back out and put it on the daily, because the daily is what shows the previous high. There's that high. And if we pull this down, here is 618. It truly is beautiful. And I would even keep the zone. We can say that the zone is 14,212 to 14,500. Still, power, sure, it can power up there. We're walking ourselves into what they say could be a promising earnings season. But I'll tell you, the canary in the coal mine here is the infrastructure package and how it is going to be paid for. And in jubilation for the package likely being passed into law and producing a great number of jobs, trust me that that's not always a grand positive for an economy. More on that at some other point. But more to the point, the infrastructure bill would be paid for by a rise in corporate tax rates. So basically, the $2 trillion they got in tax breaks at the beginning of the Trump administration will be taken back. That's going to pay for millions upon millions of people getting jobs. So the corporations initially pay for it, the government then gets the tax revenue from the corporations. But as people increase in getting back to work and having good paying jobs, the tax revenue base increases again to the federal government via that once the economy gets going. So it's a win-win situation. But initially, the companies and the corporations that have been reporting, $1 trillion revenue per quarter or annually, that's going to be cut because they're going to be paying a lot more. 2 trillion of those dollars is going to be put back in as taxes. So overall, revenue may go down. Some people are saying that's already priced in. I don't know. Because again, Salesforce comes out and says their latest year, they didn't pay any federal tax. Salesforce, they made over $2 billion, reported over $2 billion in profit, didn't pay any tax on it. That's what's going to change. So they're not going to be reporting those big numbers. They're still going to be good companies and they're still going to be fully at work. But everything has to be factored in, and that's one thing I don't believe is. Anyway, back to the numbers. I think that 618 to 7.5 are the zone that I think could complete this fifth wave, and then on top of that, a primary fifth and a cycle third. So it's an intermediate 5, a primary 5, and then a cycle 3. And then we shall begin the cycle 4. And if you have followed me for a little bit, you're going to understand that, when we were doing this, I was expecting it to come off in a 5 wave and a steep and a sharp decline. And it didn't. So it pulls a lot of things into question right away. And that's the other part I want to touch on. I know this is going a little bit longer. Please bear with me. This is educational here. Each time we move into a different type of a wave structure, like a 3 to a 4 or a 5, they all have their own personalities. That 5-wave structure does not have the same personality as a corrective wave 4. And then what we saw coming up, those rallies were too intense to really kind of fit neatly in the amount that they came in to within what our expectations were and for what was coming next. It did for a while, but then it stopped. And then it pulls us into a different structure. It's not a matter of being right or wrong. It's a matter of putting the correct numbers around what's happening so that when you go into trade, you have parameters. You aren't going to get shook up if this market just ignites tomorrow and starts blowing through resistance and starts popping above moving averages. It's all going to work out. And you're going to have to come out to your daily chart and your weekly chart to get those moving averages if this thing really gets itself going to the upside. Yet to be seen. It's not, it happens, but not to super intensity. That's why I still believe these right here. So once that is complete, again, it's one step larger. You know, it's actually from the intermediate degree to primary to cycle is 2 steps higher. These are intermediate waves, and you're going to see they can take a long time. And let's go to the weekly. And you know, intermediate waves. These primary waves, this primary 3, this is a weekly chart. It's been going for quite some time, for several years. That can be the case. Go out to the monthly chart. Yeah. So the primary 5 began off of the 2009 lows. That's the cycle wave 3. That's, 12 years right now. Well, that's how long it takes. So I'm looking for a cycle wave 4 correction. It should be at least probably a year or 2. That was another clue that told me about what we were going through. In any case, for tomorrow, continued upside. Downside, throw your fibs up. Work them out. If you got extensions, do your extensions. If you got just straight, do straight so that you've got some support. Your moving averages are going to continue to give you that support as it comes off. Right now, again, even the 30-minute. The 100, which is in the dark level and it's not actually being seen, but the 50 is above the 200. The 20 is above the 50. The 8 is above the 20. These are all pointing up. That's a 30-minute. They're pointing higher. As we come down to the hourly or up to the hourly, there they are again, pointing higher. You can come down to the 15-minute in alignment, pointing higher. This all is favorable to run long positions to the upside until breaks below moving averages start to occur. Then you work it accordingly. And that's where I'm going to leave it. The next update is tomorrow, Thursday, April 8th.